Do you feel a sense of belonging to our planet, animals and people in the context of fossil fuel burning, marine pollution and melting glaciers? I have a solution for you: ESG, environmental, social and governance. This is an investment strategy that takes into account environmental, social responsibility and good governance factors in business. These factors are considered key to ensuring a sustainable and responsible business that can deliver long-term value for investors. Welcome to my channel Invest with Jiri. In today's video, I look at a growing trend in responsible investing called ESG. I'll tell you where ESG originated, what the implications of ESG are for different areas of business. I'll discuss whether ESG investing is sustainable. I will also mention the disadvantages, how to measure them, and shed light on ways to invest in ESG companies. As well as here on YouTube, I create content on my Patreon, where I cover the latest news in economics and investing, company analysis and other details for avid investors. The link to the Patreon can be found in the video description. Now let's take a look at how ESG investing differs from traditional investing. ESG's primary focus is not only on the financial performance of companies, but also on how those companies behave towards the environment, employees and customers. Investors who practice ESG investing evaluate companies based on their commitment to environmental protection, fair treatment of employees, ethical behavior and transparent management. When investors use ESG criteria to select investments, they can be confident that their money is being invested in companies that have a positive impact on society and the environment. This can help reduce investment risk and improve portfolio performance over the long term. ESG investing can be done through different types of investment products such as stocks, bonds or investment funds. There are many companies that offer investment products with an ESG strategy, as well as many different methods to implement this strategy. ESG investing has emerged in recent decades. Its origins date back to the 1960s, when environmental legislation began to be enforced in the US. In the 1990s, the concept of socially responsible investing began to develop, emphasizing ethical and moral issues. In 2004, the study Who Cares Wins was published, laying the foundations for the ESG concept. Since then, ESG has spread and has become a common concept in the field of investment. ESG investing is increasingly important and it promotes more responsible and sustainable business. Examples of ESG in environmental, i.e., an area in which companies are committed to reducing their environmental impact, reducing greenhouse gas emissions, protecting biodiversity, reducing water consumption, minimizing waste, managing risks associated with climate change, ecological restoration. Examples of ESG in the area of social criteria in the area of social responsibility. That is, companies that respect the rights of employees, customers and the communities in which they operate. More humane working conditions, developing communities, respect for human rights, health and safety standards, ethic behavior. Examples of ESG in the area of governance, for example, transparency, independence of boards and management, respect for shareholders' rights, combating corruption, compliance with the law. It is therefore about investing in companies that respect ethical principles, have independent boards and management, and respect the rights of their shareholders and other stakeholders. Is ESG more of a fashion trend in investing, or can we see real impacts on the economy behind it? ESG investing can be seen as a trend that has been gaining prominence in recent years, but behind this trend we can see real impacts on the economy. Investors who focus on ESG investing prefer companies that respect ESG criteria and adhere to ethical principles, and thus can influence companies to focus more on sustainability and ethics. This pressure can lead to better risk management and improve stakeholder relations, which can lead to the long-term success of the company. ESG investing can also help to improve the environment and social and economic development. Investing in companies that focus on sustainability and adhere to ethical principles can lead to the promotion of innovative and environmentally friendly technologies and products, which can lead to economic development and job creation. From this perspective, it can be said that ESG investing is not just a fashionable trend, but has a real impact on the economy. What are the controversies around ESG? ESG critics argue that ESG factor data is not always accurate and reliable, which can lead to wrong investment decisions. They also claim that many companies use ESG as a marketing tool to improve their image and gain access to financial resources without actually making adjustments to their business to become more sustainable. Other critics argue that ESG factors are too subjective and depend on many factors, including cultural differences and regional peculiarities. This means that investors may have different views on what is sustainable and what is not, which can lead to ambiguous results. What are the best ways to measure ESG investment performance? Rating agencies are ideal for measurement. MSCI ESG rating. The rating is based on comprehensive analysis and data collection from over 8,500 companies worldwide and includes over 37 key ESG factors. Sustainalytics is a rating agency specializing in ESG ratings, provides data and tools to manage ESG risks and opportunities. We can also measure ESG through indices. For example, MSCI World ESG Leaders Index, complied by MSCI, which includes companies with high ESG ratings. The index includes companies from around the world and is weighted by market capitalization. It serves as a basis for mutual funds, ETFs, and other investment vehicles that target ESG investments. FTSE4Good Global Index is managed by FTSE Russell and includes companies from different regions and sectors around the world. Companies in the index are reviewed regularly and must meet specified criteria to remain in the index. What are the key factors to consider when selecting ESG investments? Use your own head. It is important to choose an ESG investment strategy that matches your investment objectives and risk profile. There are many different approaches to ESG investing, including negative screening, positive screening, active ownership, and more. Start with good data. The quality of the data you use to analyze ESG factors plays an important role. It is important to make sure that the data is relevant, up-to-date, and reliable. Diversify your portfolio. As with any investment portfolio, it is important to ensure that your ESG portfolio is sufficiently diversified to minimize the risks associated with individual investments. Investment performance. ESG is fine, but that doesn't mean you stop looking at the main thing, the performance of your investments. Are ESG investments competitive with the market? Company condition. Consider the overall condition of the company, including financial stability, management, and other factors that may affect investment performance. How do I view ESG investing? Well, to be honest, I don't look at investing the ESG way in depth, and I'm not interested in investing by these metrics. I think it is more of a fashionable way of investing for Generation Z, born between 1997 to 2012. But lately, more and more brokers are embracing ESG and incorporating it into their platforms, and it is becoming a sort of new standard. I have a positive attitude towards nature, people, and animals. I sort waste, take care of the garden, and last but not least, I have 3 boys whom I would like to leave the planet in the best possible condition. So it's up for consideration whether I will choose companies that are dedicated to ESG for my portfolio in the future. But I still can't help feeling that companies are doing it because of a trend in society and underestimating true responsibility. We'll see how ESG plays out in the future. Have fun and invest wisely.